After finishing the yachting competition today, guys, I've got some unbelievable news. We have a huge story in development right now. I just found out why the shares of Amazon were tanking like a rock on the intraday session on Thursday after hitting the 2035 mark. Guys, Security and Exchange Commission is officially investigating, you're not going to believe who, Mr. Donald Trump on manipulating the market, manipulating specifically the shares of Amazon. And when confronted, this is what the president actually had to say. Check this out.
Me and Jeff Bezos have a great relationship. There is no collusion on stock price manipulation here. I take all the bad negative comments I said back. It was 3 in the morning, and I was watching Leonardo's trading videos. Fantastic videos, by the way. Fantastic. That's when I realized I missed the buying point on Amazon Cup with Handle. So I said those bad things only because I wanted to buy the dip.
Hey guys, I hope you enjoyed the joke. If you would like to hear more jokes like that, please put it in the comment section. Let me know. Thumbs up, write a comment, hey, I love the joke, or just write a comment, hey, I hate it. Guys, in this particular video, I'm going to show you 5 bulletproof, very simple strategies on how to manage your trades. As you know, we've had a lot of traders that had some knockout results with the Amazon trades, and we had just a few guys that just actually didn't manage their trades properly and did not have great results. So for that matter, I'm just recording this quick video to share with you the 5 basic things on how you can manage the trade to minimize losses and increase your trading results. Number 1, in the current market environment, you want to focus on buying the dip. The first bulletproof point focuses on your entries, guys. And the moral of the joke was the fact that even Donald Trump knows that Amazon is going to the moon. That even he looks at the chart, being the stellar day trader that he is. I mean, he probably spends more time on the phone looking at the charts than you realize. I mean, that's why he's the first one knows when the market hits $27,000 all-time high. Now, with that said, clearly demonstrated in the joke, and I put it in the joke so you can kind of have a point of reference and remember it right here, that in this type of market environment, even Donald Trump don't want to buy the highs in the market. He wants to buy them on a pullback. He wants to buy the dip. So in your intra-weekly, intraday entries, you want to identify those clear opportunities where instead of buying the intraday highs, you want to focus on buying the pullback. If you're buying the pullback, then you're paying less for your options, and therefore your profits are going to be substantially higher. I mean, very basic stuff. If you're only getting into the trades when it's clear to you that the stock is going to the moon and it keeps going higher and higher, then it's going to be very challenging for you to stay in a position and to realize solid gains if the stock makes the pullback right after you get into the trade. Now, there are some advanced strategies on when you actually want to jump in full blast when the stock is moving higher, but for that, click the links below and get more details on those other strategies in our courses. Bulletproof way number 2 on how you can help yourself manage your trade to maximize your gains and minimize your losses is this. It's very simple. What you can do is split your expirations. In other words, instead of just buying contracts that expire this week, you can buy contracts that expire next week. And the way you would execute such a simple strategy is simply, let's, for example purposes, say that you're looking to invest $1,500 into this trade. What you can do is buy $750 worth of contracts that expire this week and $750 worth of contracts that expire the following week. As you know, some of the biggest moves, they do come on Monday or Friday. So just in case the bigger move does not materialize by a Friday, you would still be very well positioned to capitalize on that move on Monday when the markets open up. So use that strategy and you will be happy that you're doing that, because in more cases than not, it will help you to lock more gains more consistently. Bulletproof way number 3 on how to manage your trade is to actually split your strike prices. You've heard me on pretty much every video over the last few months saying that, look, in certain market environments, it really pays to buy contracts in the money. And I know if you have a small account and you're watching this right now, you're like, but Leonardo, it's really tough. You know, I mean, with a small account, some of these contracts on Amazon, they're priced really high up there. So I really don't have a choice but to only buy stuff out of the money. In that case, guys, I'm going to give you a really cool tip. Just get into your trades on Thursdays and Fridays if your account is that minor to where you cannot really invest a few thousand dollars on Monday or Tuesday to get into these type of contracts. So with that said, do not make it an excuse to trade cheapest stocks, because that will actually decrease your percentage returns and decrease your chances of being substantially profitable. So names like Amazon, for the purpose of trading options, they're great products. But even you can switch, as mentioned in the prior few videos. Remember, I was pointing out to the fact that, look, Facebook actually has the second best chart development in all the FANG stocks besides Amazon. So we actually had a comment from somebody in the last video that said, hey, I invested 36 bucks and you know, I'm sitting now at $600 in gains on Facebook. Guys, so we've mentioned that trade in the prior few videos, so somebody took action. Congratulations to you. That's a solid gain, guys, from 36 bucks to $600. That just proves the point that anybody can do it if you follow the information that we provide here and you guys take action. As a matter of fact, coincidentally, somebody yesterday in the trading room was asking the same question at the very open, because guess what? You would think, oh, Facebook is dropping. Oh my God, they're talking all this crazy stuff. The Libra project is getting killed. You know, they're going in front of Congress again. All the testification, all this negative stuff. It's going down. So when I was faced with a question in the chat room yesterday, somebody asked, hey, should we be buying puts on Facebook? I said, no, just buy the calls. And interestingly, that question was proposed about 9:32 a.m. when guess what Facebook was doing at that time? Facebook was dropping. Where did Facebook finish up? At 205. Guys, that is a $6 move for a large cap stock. I mean, you know, Facebook does not move crazily like Amazon. So those contracts gained some substantial traction. I want to point out specifically to those of you that actively trade in the markets, in our 13 Markets Move daily subscription analysis, we have been identifying a very solid pattern of the market actually rallying substantially on huge volumes, specifically in the last 15 to 30 minutes before the market closed. And as you guys are researching your trading ideas and so on, I want you to actually pull up the chart over this weekend and try to look specifically in a 1 day, 1 minute chart. Observe what Facebook was doing and on what kind of volume in the last 30 minutes of the trading session. So again, as in the prior video that was posted yesterday, I know it spoke to a lot of you out. I mean, it was kind of a scary video. It was a little out there with the inner voices and whoo, scared of the crash when the markets are hitting all-time highs, guys. I know it's easy to get scared when you're looking at stuff and it drops, but trust me, buy the dips and stick with this strategy. And the way to manage these trades is you can buy options by splitting your strike prices wisely. Buy some calls in the money, buy some calls out of the money. Just don't buy all calls out of the money. I keep emphasizing it in every video, and unfortunately, I'm trying to iterate it one more time because I think not everybody is paying very close attention to me explaining the market environment dictates for you to buy calls in the money and give yourself more time on expiration. Guys, it's very simple. Just take action on this information. Again, instead of just buying a bunch of calls out of the money, buy the position and split it again for the same purposes. Buy $750 worth of calls in the money, $750 worth of calls out of the money. If the big moves comes on a Friday, those out of the money calls are going to make you a huge percentage gain. Those in the money are going to make you solid gains. But if the bigger move on Friday does not come, then the ones in the money are still going to put you in a situation where you will lock gains and not losses. Guys, point number 4. So the bulletproof way number 4 to manage your trade is to stair-step into your trade. So remember, stair-step into the trade. will protect you from instantly occurring some big losses. In other words, if you are not 100% certain how to utilize the strategy of buying the dip, and you think the dip is coming, but a slightly greater dip is happening, if you're jumping in, all in, right, at a certain point in time in the day, and the stock continues to drop, all of a sudden you got a huge loss. So use a strategy of buying some contracts at a certain level, and if the price actually continues to go lower, you can add. That is, if the market conditions overall are still bullish and everything in the charts points that the move higher is coming. Overall, this is a very easy strategy to implement right now. And again, for those of you that are trying to understand, what do I really mean when I keep saying the market environment, the market environment? Guys, we talk a lot of specific details about how to trade various market environments, because each market environment requires a specific strategy. So if you're trying to become a better trader and take your trading game to the next level, click the links below, take the courses so you can master all these various market environments and know specifically what strategy to use and when. So steer step into the trade. This is what we mean. And again, some of you guys with small accounts, you only trade one contract. It is very challenging. Do your best, whatever it takes, to trade contracts in pairs, meaning buy two contracts, but don't buy them at the same time. Buy one contract. Let's say when we send out a message to our group on Thursday, when Amazon was dropping, initially dropped to a level of 2008, we'll send a message, buy the dip here. Boom. So you would have bought one contract there. Later, Amazon pulls back down to 2001 level. Boom, you stair step, you buy another contract. What happens the next day? It opens up 2012, 2013, 2015. Boom, you stair step out of your trade. That's how you do it. And that's actually going to take us to the next point. But to reiterate this one more time, steer step into the trade. Do not jump in your trade all at once. And certainly do not risk your entire trading account towards any given trade, because that puts a lot of risk in your account, guys. You know, when I trade, I've shown you videos when I trade live. What I do is I split the account in 2 or 3 ways. And once I get some traction locking in some gains, I use that to invest in other trades. So, but very rarely do you see me just take the entire account, unless it's like, you know, $600 or something, and I'm just trying to demonstrate a point. If you see me trade with a bigger account like 20K, 25K, I typically take $5,000, $6,000 out of that. For those of you that are trying to learn more about that, watch this live example. Just watch this video where I show you how I take $4,000 to $63,000, okay? And very important point about stair stepping in. In that particular video, guys, it gives you a very good example of how I steer step into the trades. Now, I buy initially 50 contracts of a particular option strike, then I add 50 more, and at times you will see me actually add 50 more after that. So I don't jump out and buy 150 contracts all at once. I buy 50, I add 50, and I buy another 50. Okay, which takes me to the next point. Point number 5. Stair step out of your trade. A lot of times I show you in my live trading videos that very simple approach that I just described, how I stair step into the trades. I use the same approach to steer step out of the trades. In other words, I buy 50 contracts, add 50, add another 50 contracts, and then you'll see me sell 50 at a certain price. You'll see me sell 50 at another price, and then you'll see me finish closing out the position at the final price. So the reason it makes sense to do so, and just for the basics and simplicity of this video, just remember, if you're getting into your position and you're up 500-600%, okay, if you trade in pairs, you say you have 2 contracts, sell one and keep the other one for possible future gains. But make these calculations ahead of time at which levels you would actually begin to take profits. The goal of this channel is to share some great information, some good tips that could help you evolve into the better trader, but clearly there's no way possible for me to understand who gets at what price, what strike, what expiration. So when we make these suggestions and share our observations on the market, it is your responsibility as a trader to take action and be responsible for closing your positions, be responsible for initiating your positions, and be responsible for taking action on the information that we share here. So Those 5 bulletproof strategies, guys, if you use them, you will improve your results, you will accrue less losses, and you will increase your gains substantially. If you have further questions, or if you're striving to learn all the details about all the other trade management strategies that you can utilize, guys, click the links below, take action. The earnings season is about to start. The most valuable thing you can learn right now is how to trade earnings correlations. There's some powerful trades and strategies that are explained in the course. I invite you to check it out so you can have the best trading earnings season of your trading career. Guys, I'll catch you in the next video tomorrow.